Really quick, I'm Debbie Schwartz again. Sorry about the mishap. And I'm here tonight with Chris Upcarians from Juno. Chris will tell you about Juno. And tonight we're going to talk about Student Aid Index. So we're back and starting over again.
Uh, Thank you, everybody, for bearing with us and for taking time out of the evening to learn about Student Aid Index. So, again, just really quickly for those of you who may not have been on before, I'm Chris Upcarians. I'm one of the co-founders of a company called Juno, and I have developed a little bit of expertise on the topic that we're going to walk through tonight. I'll tell you a little bit more about Juno in a few minutes, but I'll just start off with our agenda for what we'll be going through for the next really hour plus. So, as a reminder, is going to be a recording of the webinar, and happy to share the slides at any point. But we're going to start off tonight with walking through a brief overview of the timeline for getting federal student aid, which this year is going to start in about 2 weeks on October 1st. I'm going to give you a 1 minute view on what Juno's role is within this, and then we're going to jump into talking about what Student Aid Index actually is. We're going to spend most of tonight's discussion talking about how Student Aid Index gets calculated, and so I'll break down all of the math that goes into the number that you see. And we'll briefly touch on a few strategies that could help you reduce your SAI. And if time permits, there's a bit of a lengthier portion that can go through how SAI impacts the financial aid award amounts that you might receive in your award letter that you'll get a few months from now. If you have any questions, please feel free to ask them in the chat. We'll stop along the way and try to answer as many as we can, especially when it's relevant to the slide in question. And I'll try to save as much time at the end for more Q&A. So let's just start off with understanding the overall timeline. I mentioned that 2 weeks from now, the FAFSA form opens. And what I mean by that is the first step in the process for getting student aid is to fill out this form that the government releases once per year. And for anybody who will be seeking aid for the 2026-27 academic year, meaning for the year where you are starting college in the fall of 2026, that form is going to be released on October 1st. So you're going to fill that out, and it'll typically take under an hour to do so. About 1 to 3 days after you fill out that form, you'll get an email that says you can log back into your federal student aid portal and see your student aid index number. So that's when you first submit FAFSA, you get an initial estimate. 1 to 3 days later, you get an official SAI. And tonight we're going to talk a lot about how the information that you put into FAFSA actually turns into that SAI. Most people will have applied for a regular decision college in sometime late December, early January. And for a lot of schools, you'll end up hearing your financial aid award letter in March to April timeframe. It could be a little bit different depending on the school, but quickly after that, you will want to learn about and consider appealing that financial aid award amount. And then typically early May, you would decide where to go to school. In the summer, if you need any funding after the amount of federal aid you've received, you may then research different student loan options or other things. And in the August to September timeframe, for most schools, that's typically when your student bill will be due. And so if you're here right now, you're starting 11 to 12 months before the end of this process. That's fantastic. Now is a great time to get started, and kudos to you for being so involved so early on. Before we dive in, I want to just touch on one pretty important thing to understand about how federal student aid for the fall of 2026 is going to look a little bit different than it did for previous years. And I'll touch on this more later when it makes sense in context. But the key change is going to be that For anybody whose children are going to school for the first time in the fall of 2026, the amount of money that you'll be able to access through the federal government is going to be lower than what you could have accessed in previous years. And that is going to potentially impact how you think about the overall paying for college decision tree. I'm not going to go into it in too much detail tonight, but in future webinars that we'll do together, there's some more information that will help provide. And so I mentioned this because Juno's role in the overall market is really to make sure for anybody who does need money after you've maximized what you can get from the federal government, we work very hard to try to make sure that we're able to provide you with access to the lowest rates that we can find in the market. And we do that through a model where every year we have people who join effectively a wait list. We call it a negotiation group. And what that really means is, look, if there's a chance that you might need help to pay for college in the fall of 2026, we asked people to start joining effectively a wait list now, all the way through May. And in that, you're really just telling us what year your student is graduating and a few other things that you can optionally answer. And what we do is we go to many different banks and credit unions and other sources of funds. And we tell them, hey, look, there's 10,000, 20,000, 30,000 people who are part of this group. Is there something that you can do for this group that's better than what you would normally do? And then on June 1st, we make that available to everybody in time to be able to get funds to pay for school. Juno is an interesting concept because it's free. We don't obligate you to do anything. You really are just signing up to a wait list where we'll give you updates once a month on how our negotiations are going, how the size of that group is progressing, and if there's anything that you need help with along the way. We have basically all year round free financial advice that you can book one-on-one, whether that's through email, text, Zoom calls. About 5,000 people used it for free last year to speak to somebody on our team. And whether or not you use Juno, we're here to help. This is all we do all day long, all year long, is try to find out ways to help people figure out the most efficient and cheapest way to pay for school. Sorry, there's an issue with my slide, but what we're going to talk about tonight is really just getting your student aid index, which is a very key component in determining how much financial aid you may ultimately receive from the school. And so let me start off with a general view on how FAFSA results in student aid index. And then we're going to switch to talking about what student aid index itself actually means. So I'm going to call it SAI from this point on in the presentation, just so that I save myself a little bit of a mouthful. And you'll hear SAI on the internet in different places if you search it as well. So SAI is a number that gets calculated based on a set of rules that the Department of Education has based on the information that you provide in the FAFSA form. The FAFSA form itself includes information on your household's income, on the family's assets, and on a few other things like the family size and where you live. And based on those inputs, there's a bunch of different calculations that get run by the Department of Education to turn everything that they know about your financial picture into a single number. This number is not your financial aid award package. We'll talk more about what it actually is. But I'm going to preview a webinar that we'll do probably a few months from now to say the biggest flaw in this whole process is that student aid index is based on information you put in FAFSA, but FAFSA does not capture a full view of your family's financial picture. And there are many things that you may think are relevant and want to be able to communicate to a financial aid office that they should consider when determining how much aid you should be eligible for, that you can't actually put into the FAFSA form because of the way it's structured. And in the future, we're going to cover a long webinar on what those reasons are and the way that you could appeal to the financial aid office to effectively just allow you to provide more information that can let the financial aid office can reconsider the amount of aid that you might be eligible for. So SAI is a starting point, and tonight's conversation will help you get a better understanding for how the math works that calculates that starting point. When you get the SAI 1 to 3 days after you fill out FAFSA, you're just going to get a single number. And that number is going to be an index from negative 1,500 up to a much larger number. And the key thing to understand here is that the lower your SAI number actually is, generally speaking, the more federal student aid you may be eligible for. There's not a hard and fast cutoff I can give you right now on if your number is above or below X, you're going to get aid. We're going to go through that in a little bit with a few scenarios. But that's the only thing you really need to remember. That the SAI is a number that the financial aid office gets. They look at that number, and then there's a different set of rules they use to say, okay, Chris's SAI is 30,000. And based on his SAI, we can give him these things. But Stephen's SAI is negative 1,000, and based on that, we're able to allocate a couple of different things. And so that's what they're going to do with it. They're going to get that number, they're going to follow a set of rules that they have, and then they're going to use those rules to determine what they can give you. So quick reminder, the SAI is not your financial aid award amount. It's not the amount that you are expected to pay. You just need to remember that lower is better, and there are some things you may be able to do to make it lower. There are three, so I was mentioning that the financial aid office uses this SAI number to determine how to allocate aid to you. And there's just one really simple formula I'm going to start off with that they use at the beginning of the process. Every school has a cost of attendance number for the upcoming academic year. And that cost of attendance number is, you can think of it like the sticker price for the school. It's made up of tuition plus fees, plus some allowance for room and board and living expenses and health insurance and other things. You can think of it as just, what does the school think the full cost is going to be for you to actually attend it for the upcoming year? It's published on each school's financial aid website. So what the way the math ends up working is we start off with whatever the cost of attendance is for that program that you're getting a financial aid award letter from. Then the financial aid office subtracts whatever the student aid index is for the student who has applied. And the difference between those two numbers is the level of financial need that gets calculated. And so the school will take this number and say, okay, this person has a lot of financial need. There are certain things that we may be able to do to help them be able to afford this program. But in some cases, your SAI, the difference between your cost of attendance and your SAI, that might end up being very small. And so the school might come back to you and say, look, your SAI is too high. There's really not much that we can do for you. You have to pay this bill. And so tonight, let's just better understand how we get to that SAI. I'm going to pause for just 1 second if there's any questions that we should go through. No? Okay, great. Yeah. So I mentioned in 2 weeks, you're going to be able to fill out FAFSA for the first time for the 2026-2027 academic year. And once you hit the send, effectively the confirmation button, you're going to see something called a screen that has an estimated SAI on it. And it's usually fairly accurate. But 1 to 3 days after you submit the FAFSA, you're going to get an official SAI. And on this slide, which again, you'll get a copy of, it's just instructions for how you can go back to the FAFSA application and find your official SAI. If you end up submitting FAFSA on October 1st, then probably by October 4th, you'll be able to get that official number. And again, that official number, which we're about to turn into how it works, is not your financial aid package. That by itself, it doesn't mean a lot. The official financial aid package that you're going to receive is not going to come, in all likelihood, for a few more months from now. Okay, so SAI is made up of three components. To back up for a second, there was a bill that Congress passed that had basically it determines some aspects of how federal student aid gets calculated. And the Department of Education has a really long PDF and a manual that goes through in excruciating detail how every number that you put into FAFSA turns into your SAI. What I'm going to do now is my best attempt at distilling that PDF and some other sources into the most simplified way of walking through how we actually derive SAI. And so there are some calculators that you can use online to estimate your SAI. Debbie, I'll share with you a link that I found to the best version of one that is currently hosted that anybody can use in case you're curious. Okay. But the three components that make this up are something that the Department of Education calls the parent's contribution. So based on the parent's income and assets, how much of what you have is expected to go towards your SAI. You add on to that the student's income, and there's adjustments that happen to these numbers, and then you add on to that student assets. The combination of these three numbers equals your SAI. And what we're going to do is walk through how we actually get to each of these three numbers with a very tangible example. And so the example I'm going to use for the rest of tonight is assuming that we're talking about a family of 4, where the parents are married and filing taxes jointly. We'll assume that the parents' combined income is roughly $80,000, and that the parents' assets, of 50, student income of $15,000, and that the student has about $2,000 sitting in a bank account. You don't need to remember this. I'm going to go through this in as much detail as I can. But for each person's actual scenario, your SAI numbers is going to shift a little bit. The rules that we're going to walk through tonight are generally the same for almost everybody. And so the first portion that we need to calculate or understand how to calculate is the parent's contribution. And that's going to start off with this thing called parent available income. To back up for 1 second, for the next 20 minutes, I'm going to be walking through just a few slides that try to break down the exact math behind how we get to each of those three components of student aid index. And the key thing to understand here is that there is just a simple set of calculations that the Department of Education runs on everything that you put into the form. And what they're trying to do with the way that they set up these formulas is to effectively say, okay, if you make $80,000 a year and you have $50,000 in assets, we know that you can't just pay all $80,000 towards college this year. And we know that we can't ask you to drain all $50,000 of your assets to pay for college. So here's a set of rules that the Department of Education says determine how much of that income and how much of those assets they expect to go towards effectively what you would be expected to contribute in a way. This is not exact, but that's roughly the way to think about this. So we start off with income. The first line that you'd see in that long PDF would say, whatever your parents' actual income is, that is input into the FAFSA form. In this example, it's $80,000. But you can't use all $80,000. And so we subtract from that a certain set of allowances, like the taxes you paid. We also subtract out something else that's basically protected income based on the size of your family. And so if you have a family of four, we subtract out some more money. If you have a family of 5 or 6, we subtract out even more money from that. And the purpose is to effectively say the larger your family size is, the less of that income is going to be available to help pay towards college. And so in this example that we're using, we're basically saying the parents started with 80K income that they input into FAFSA. The rules that the Department of Ed set up say that $64,000 of that income is not available to pay for school. And so the real income that's available is $15,960. After that, we calculate something called the parent's contribution from assets. And so you look at the total net worth that you're going to be inputting into the FAFSA form. And this is a can of worms that we're going to unpack when we do a longer webinar on the FAFSA form itself. But we look at the net worth of the family. And so when you fill out FAFSA, there's going to be a bunch of questions that get asked about how much money do you have in the bank account? How much money do you have in stocks and bonds, in real estate that you have invested in? We don't look at certain things like your retirement accounts or the value of the home that you live in, so your primary residence. But we basically look at everything else. And in this example, again, we're saying that that's $50,000. Well, the Department of Education says, based on this set of rules, that only 12% of that $50,000 is the parent contribution from assets. And so we take that 50K, we multiply it by 12%, and we get $6,000. We sum those two numbers together. So the 15,960, that is your contribution from income, and the $6,000, that is your contribution from assets. And we get this roughly $22,000 number. That's a middle step. There's another step beyond this. And so that's called parent adjusted available income. There's one more step here. So basically what this number is, this 21,960, by the way, you can kind of think of it as saying, regardless of what your assets are and your income are, it's the Department of Education's attempt to get to a single number that represents your assets that are available to help pay towards school. And then they haircut it one more time with this thing called a contribution adjustment. So they'll say, okay, that 21,960, we're going to put that against a set of numbers that kind of look like tax brackets. And so these tax brackets have marginal rates, just like a normal tax bracket would. And so they're basically saying, let's take the 21,960 and multiply it by the numbers that you see in the middle of this chart. What that actually looks like in practice here is 21,000, for the first 21,300 of that number that we calculated, the DOE takes 22% of that number. And then for the amount above the 21,300 up to 21,960, we'll take 25% of that number. And when we basically multiply those numbers together, it leaves us with the final answer for that first of the three boxes that exist in SAI, which means that $4,851 is the first box in the student aid index calculation. Put another way, if your scenario matches this, where you're a family of four, 80K income and $50,000 of assets, 4851 would be the parent's contribution towards student aid index. And the only remaining steps would be to calculate how much contribution is going to come from the student's income and from the student's assets. Thankfully, those two numbers that we're going to walk through in a minute, those are a lot simpler. What we just walked through is the most complicated set of numbers that we'll go through tonight. Debbie, please just maybe let me know if there are any questions that I should touch on here, only because I on a slightly
Yeah.
smaller screen today.
Okay. There's a few questions related to student income and
Yeah.
in particular, how much, if a student did have a job, how much can they earn? And does whatever they earn have to be reported on FAFSA?
Uh, yeah, look, it's a really good question because the way that all of the numbers in FAFSA work for income is that you're always going off of something called prior year income. And so if when you submit the FAFSA form in this October, if that's when you submit it, it's for the 26 academic year. And that's going to use your tax returns from 2024. Uh, when you submit the following year's FAFSA form, it'll use the tax returns from 2025. And so the numbers that you're inputting into the FAFSA form itself, those are typically going to be pulled automatically from the IRS, thanks to new updates that the form created. And it's just going to be what the parent earned 2 years ago and what the student earned 2 years ago. So if your student didn't really earn any income when they were a sophomore in high school, then that number is going to show up as a zero. If they did, then there's another set of rules that we'll walk through right now. So the student's income or the contribution from student income towards FAFSA, it's a little bit simpler than what we looked at for the parent. In the example that we've been using, we said, okay, let's assume that this student has $15,000 of income that they earned that shows up on their taxes. Well, the rules say that the first $11,510 of student income doesn't count. We just subtract that. So if they earn below 11,510, it's as if they didn't earn anything at all towards FAFSA. And they also subtract out the taxes that are paid. And so that leaves the student available income in this example as just $843. This is a similar adjustment to what we did on the last set of slides. Sorry, 1 second. And then whatever number you get to there, so you take the income, you remove the allowances, and then you divide it in two. That's the simple math for how the student's income ends up impacting the student aid index result. So in this example, we started with somebody who had $15,000 of income, and only $422 is going to go towards the actual SAI number. And then there's one more step, which is just saying, let's take a look at whatever assets the student has. And that's even simpler. So for the parents' calculations, this was fairly complicated. But for the student, all FAFSA does is says, okay, whatever assets you're reporting, 20% of those are available to help pay towards school. So in this example, we said the student had $2,000 sitting in a bank account. And so we multiply that by 20% and we get to another $400 that gets contributed towards their student aid index number. There's an important principle here, which is to say, the way that the form is set up, it treats assets that a parent has much more favorably than assets that a student has. And so if you were thinking of just transferring money over to the student for any reason before you submitted the FAFSA form, hold off until after you submit the FAFSA form. When SAI is going to be calculated based on what you put in the form. You are supposed to report asset values based on the day that you submitted. If you just hold off on whatever gift you would have otherwise been giving to a student until after you submit the form, then less of whatever that sum of money is will show up on the FAFSA form and be penalized with this 20% assessment. That was a lot to get through to the actual SAI calculation for this example family. It's really just made up of those three scenarios that we went through. And so we said that the parent, based on their assets and income, they contributed $4,851. The student's income added another $422 on top of that. And the student's assets added another $400 on top of that. And so this family's SAI is $5,672.
So
I'm going to pause again. Yeah, go ahead.
there was a question earlier, but I think now's a good time to answer it. Somebody said, so is my SAI what I'll pay for college?
Your SAI is not what you're going to pay for college. It's not even, it's not at all what you're going to pay for college. And I know that that's confusing, and it's kind of unfortunate that it's all set up this way. But you won't know what you're going to pay for college, to be completely honest, until you get your financial aid award letter back from the school. You want a low SAI. In most cases, that's the best outcome for you to likely get more aid. But what ends up happening is this: the financial aid office has some financial aid offices have no money that they can give you by themselves. And so all they can give you is whatever federal student aid is normally available to you. And if you have, the lower your student aid index number is, the more aid they may be able to allocate to you. And for each school, this is going to be different. Some other schools might have a very big need-based budget that they are able to allocate. And so they may be able to look at the same person and say, okay, this is your student aid index. This is what we can give you from the federal government. And this is what we can also give you from our own pot of money. And their own pot of money might be is typically going to be allocated also to people who have a lower student aid index. And so because you won't actually know the resources that are available to the schools that you're going to be admitted to and getting financial aid award letters from, the SAI number itself is really just a signal that all the schools that you've been admitted to can use to do their best job at giving you as much aid as they're able to.
Chris, another question about what if my student didn't earn income in 2024, but earned it last year? And then this question goes along also with a question about how many times do I have to fill out FAFSA?
Yeah, so you have to fill out FAFSA every single year that you'll be in school. And so you'll fill it out this October, and this October it'll impact the school year that starts in the fall of 2026. And each October after this, you'll need to fill out a new FAFSA form. Each year that you fill it out, the income that's going to go into the calculation is going to be based on your tax returns from 2 years before that period. And so there could be a scenario where maybe you earned income in 2024 that shows up on your 2026 FAFSA. You didn't earn income in 2025. And so the student's income in that portion of it is going to show up as a zero, but that won't impact things until a year from now.
Okay, do you want to move along?
Yes, yeah.
Some more questions, yeah.
So we're going to get to, there's a lot on this slide. This is a sensitivity table that shows you, it's meant to answer a very common question that we hear, which is, can you give me some sense for whether I might get any aid from a college based on my income and assets? And the way to read this is to say, first, starting off with a key takeaway. The way all of this math works, if your income is above $350,000 for the parents, for the household, it is highly unlikely that you would get any amount of federal student aid from anywhere, even if you have very low assets, just because of how the math works. Uh, but what we're kind of showing here is the yellow highlighted section shows you a scenario where you assume that the cost of attendance for the school that you are seeking aid for is $40,000. And so this would be comparable to somewhat of a lower cost school. And so if your cost of attendance is $40,000 and you're in the yellow, that would be the combination of income and assets where your SAI might be lower than your cost of attendance. If your SAI is lower than your cost of attendance, then you might have some level of financial need that the school could help you with. But if your SAI is higher than your cost of attendance, then there is really no amount of financial aid that the school would provide to you based on the way the math works. And so there are a few versions of this slide that I've made for a family of 3, for a family of 5 that are in the appendix of this presentation in case you're curious when you get it. And hopefully it's just a helpful general rule of thumb to just pinpoint where you might fall along this grid. And when you use some of the calculators that we'll share, you can get a more robust view on what your actual SAI would be. So the two principles that I was mentioning earlier are that one, your income is based on 2 years before the form that you submit, and 2, your assets are reported as of the day that you submit, which leads to a few interesting things that can impact your student aid index as long as you're thinking a little bit strategically about the day that you submit FAFSA. So let me walk through a few of these. Asset purchase timing can make a pretty big difference here, not for everybody, but in some cases. So the example I'll give you is, let's say you need to change a roof or you need to buy a new car. And that cash is currently that you're going to use to make that purchase is sitting in a bank account. If you know that you're going to make that purchase over the next few months, it may make sense to wait on submitting FAFSA until after you have made that purchase. Because the moment that cash in your account turns into an asset like a roof or a car, it is invisible to the math for student aid index. It is as if it does not exist. And so if you know that there is a major cash outlay that you are going to make, it can make sense to delay submitting FAFSA so that on the day that you end up submitting it, you report accurate numbers that are excluding that. The
Chris, do you
second,
mind
yes.
give an example relative to that, the asset purchase timing? Because that we get a question a lot about, and it's related to sometimes people selling their homes. They wonder and they say, well, I'm in the process of selling my home, but I'm gonna need the money to buy another place. But in the meantime, the proceeds might end up in their bank account during this FAFSA time period, and the government doesn't know, why the money is there, and to some extent they don't care. And just because you know you're going to use it to buy a home at a later point, they don't know, and again, they don't care. So you just again might want to know timing if you're in that situation of selling and rebuying, a house or any sort of
Yeah.
residency.
Yeah. Honestly, it's an excellent point. The official rules would say that whatever the amount is that is sitting in your bank account is something that you need to report as an asset. And I honestly recommend that you follow that official guidance because you are legally attesting that the information you provided is correct. But that bank account itself isn't being manually checked anywhere in this process. And if you are in a situation where you have sold a home, that cash is sitting there, you report it accurately as sitting in your bank account. but you know that you're using it to purchase a new home in a few months' time, you can have a separate conversation with your financial aid office to give them the opportunity to reconsider whether or not they will include that cash into your SAI calculation. But that's going to be a whole lot more complicated. And I can't guarantee you that they would make that adjustment for you. It is quite possible that they would make that adjustment for you, but I cannot guarantee it.
Mhm.
The second really common mistake that people make when they're submitting FAFSA, and again, we'll go through this when we do the longer FAFSA presentation, is to make sure that you're reporting the net value of your assets. And so there are portions of the FAFSA form that are going to ask you, do you own a business? What is the value of that business? It doesn't ask you if there's any debt against that business, but if there is, you would subtract how much debt you have on the business from the actual value that you calculate that business is worth. Uh, I see this more commonly as a mistake that people will make when they might have a second home that they are renting out as a real estate investment, where sometimes they'll just report the Zillow value on that home, but actually they have a mortgage on it. And what they should have actually reported was the value of that home minus the total outstanding mortgage that exists against that home. So that would have resulted in them reporting a much lower asset amount that could have had a very big impact on their student aid index number. So just be really careful when you're submitting the or answering the asset questions on FAFSA to make sure that you are looking at net assets and not the assets before you consider debt.
And Chris, maybe just to clarify one other thing related to this.
Mhm.
It's exactly what Chris said. But FAFSA unfortunately doesn't care about your general debts. If you have like a car loan or you have credit card debt, that they are not expecting or wanting you to net out of your, overall general investments or savings.
Correct. So I now see a few questions that are popping up. This doesn't apply to your personal home because the home that you live in is already invisible from FAFSA. Do not report the value of your primary residence in the asset portion of the FAFSA form. It doesn't count at all. And the same is true for retirement accounts, for 401ks, for anything else that falls within the bucket of retirement accounts. You do not report those as assets on FAFSA. It is as if they do not exist. The form is set up that way on purpose. In a future presentation, we'll go through a longer list of the things that you do report and the things that you do not report. But yeah, just remember that. No primary residence, no retirement assets is the two big bucket of things that are excluded from visibility in this form. A third one that's pretty, it's an interesting thing to note, which is I've run into cases where people ask, okay, a grandparent in the family has a 529 plan that has been set up for my child. Do I report that as an asset in this FAFSA application? And the answer is no. If it's a grandparent or an uncle or an aunt or a very generous friend who has created a 529 plan and funded it for your child, it is also as if that does not exist when it comes to calculating student aid index. That doesn't get reported anywhere, and you should not include it anywhere. That is the correct set of rules to follow. Don't report it. And the other two things just to kind of remember here is family size has a pretty significant impact on the amount of income that gets excluded from the SAI calculation. A lot earlier in this process, I was showing you how one of the first steps is that we're calculating the parent's contribution from income. And we took the $80,000 example that we had for this family, and we subtracted the taxes they paid, and we subtracted an asset protection, income protection amount. That basically said, this is a family of four, and they need at least this much of their income to be able to survive. So we pretend that it doesn't exist. Well, if in the FAFSA form itself, one of the questions does ask you the number of people who are in the student's household. And it's just really important to make sure that you get that right. Sometimes people will go through that question quickly and perhaps put a lower number than they should have. Make sure that you're putting an accurate number because it increases the income protection piece, which can result in you getting a lower SAI number. And the last thing to touch on here on this slide is really just reiterating the concept of appealing your financial aid award decision, especially in cases where your income is lower than what gets reported into FAFSA. So we've been saying that for the form that you'll fill out this October, it's going to be based on your income from the 2024 tax year. And for a lot of people, you could have had significant changes in your financial circumstances since 2024. You can't manually change and override the income and put your lower current income. That's not how the form is supposed to work. What you do if you unfortunately have lost your job or you have otherwise seen a material reduction in your income since 2024 is you submit an appeal to the financial aid office. And there's a formal process to use there. And you basically tell them, look, my SAI was calculated using information that no longer accurately represents my family's finances. This is what my actual income looks like now. Can you please recalculate my SAI and reconsider the amount of aid that my family might be eligible for this year? So in a few months, we'll do that much more detailed presentation on how you would submit an appeal, a much longer list of reasons why you could go about submitting an appeal, and hopefully that will make sense. I'm mentioning this now because I'm confident that there are people who are listening right now who are worried that the information that they'll submit into FAFSA is not going to accurately represent their financial picture. Don't worry yet, because there is a mechanism to help remedy that we'll go through soon. See a handful of questions. I'm going to touch on one here really quickly before I try to walk through just an example of how SAI flows through to your financial aid package. And so the question here is, how do twins going to college at the same time affect your financial aid or your SAI? It's a fantastic question. When you fill out the FAFSA form, you're going to see a question on there that actually asks you how many people in the student's household are attending college this year. And if you have twins, you might put 2. But that has no impact on your SAI. It used to in an older version of the FAFSA form, but more recently changes had been made. That question still exists, but if you put 1 or 50, it doesn't actually change the SAI that gets calculated. That doesn't mean that there's nothing you can do, because it's logical to say that if you have more than one child in school, then we should probably be making some adjustments to the amount of income and assets a family has that can help pay for school for each child. So if you have multiple kids in school, just know that that is another extremely common reason why you're going to want to appeal the results of your financial aid award letter. And we'll go through that in a bit more detail in a few months as well. So I'm going to go through this section a little bit more quickly because it can get into a lot more detail than is necessarily helpful for everyone right now. But right now, you can effectively pretend that I'm a financial aid officer. And what I'm going to walk you through is how I would be packaging the financial aid letter that you would receive from me a few months from now, based on the student aid index that we calculated for the example family that we've been using for a majority of tonight. And so as the quick reminder, this family was 4 people. The parents had an income of $80,000. the assets of $50,000, the student had $15,000 of income that was reported on FAFSA, and the student has $2,000 of assets. That gets us to an SAI of a little bit over $5,600. And now we're going to kind of just walk through the left-hand side of the slide. That's going to stay the same. I'm going to just fill out numbers on this in the order that I, as the financial aid advisor, theoretically, would be packaging your aid based on the rules that I'm supposed to follow now. And so thankfully, I am the financial aid advisor for a school that has a relatively low cost of attendance of $20,000. And your student aid index is 5,672, which means that you still have financial need of 14,328. The first thing that happens in my process is I'm taking your cost of attendance, I'm subtracting your SAI, and I'm getting to that financial need amount. Unfortunately, I can't just give you $14,328 worth of aid. I have a different set of rules I have to follow that says what forms of aid I'm able to provide you. And the forms of aid I'm able to provide you might not actually equal $14,328. I might be able to offer you a lot less than that, but I'll do my best to allocate as much as I can to you. If in the future you appeal your financial aid and we calculate a lower student aid index number for you, then I might actually end up being able to allocate some more money to you. But let's go through things based on the rules that are in front of me today. And just the other thing to remember here, by the way, is that the type of financial aid package you're going to get, it's going to be different from one school to the next, also depending on how much that school costs. And so your level of financial need is something that each school is independently going to have to calculate. And for this school, my financial need is $14K. But if my cost of attendance for a different school was a lot higher, then my level of financial need would also be calculated as being a lot higher. The first thing I'm going to look at is, are you eligible for a Pell Grant, which is money that does not have to be paid back. And it comes directly from the federal government. There's a lot of different ways that the math gets done to calculate what size of a Pell Grant I can allocate to you. But the basic rules kind of work as follows. If your adjusted gross income for your household falls below a certain number, and it's a number that gets updated with some frequency by the federal government, then I get to automatically say, okay, you qualify for a maximum Pell Grant, which is $7,395. And just generally speaking, if your income is above whatever that threshold is, then I have to follow a second set of rules that is pretty common. And that second set of rules effectively just says we take that 7,395, which is the maximum amount of a Pell Grant that I can give to you, and subtract whatever SAI was calculated for you from 7,395. And so for you in this case, I calculate that you are eligible for a Pell Grant of $1,723. And so that's just effectively, again, money that doesn't have to be paid back that I can give to you. If you still have financial need after I've allocated you a Pell Grant, in this case, you clearly do, then I move on to the next step, which is another grant that doesn't have to be paid back. It's called FSEOG. You don't have to know too much about it, but the way it generally works is at my school, I get allocated a certain amount of money through this program that I'm able to give to students. And I have to follow a certain set of rules that says, based on the student aid index of everybody who has been admitted and applied for aid, how do I divide up the sum of money that is at my disposal for this year? And generally speaking, I'm going to give the money from this bucket to people who have very low SAIs. And so there's not a exact amount that I can tell you right now that I would give you, but it's going to be somewhere between $100 and $4,000 for this year. Your SAI of 5,672, it's not extremely low, but it's also not high. And you still have a lot of financial need. So I'm going to choose to allocate, based on the rules that my school has set up, about $1,000 to you in an FSEOG grant. And so again, this is more money that you don't have to pay back. Each school has a slightly different set of rules that they might follow regarding this, but the logic is generally the same. The next step is, okay, there's no more free money that I can give you from my federal budget. So the next step is that there's money I can give you that you don't have to borrow, but you might have to work for it. So I have another bucket of money that is available to me through what's called the Federal Work Study Program. And so the federal government will subsidize most of the wages that the student can earn through different types of on-campus jobs. And there's not really a hard set of rules around how much federal work study I would allocate to you, but in most cases, it's somewhere between $1,000 and $5,000 per year. This can be higher, it can be lower, it can be nothing, but let's just use that 1 to 5K as a relatively safe assumption for right now. And so again, I look at everybody who has applied for financial aid. I look at the amount of remaining need that everybody has after I've allocated them the grants that were available from my budget. And for your case, I'm able to allocate you $1,000 of federal work study. And so the student can work an on-campus job at some point during the year and earn up to $1,000 through something like this. Now, unfortunately, I'm kind of done with the types of funds that are available to me through the federal government that aren't loans. And so I have really a two-step process that's left here. I can, now the point that we get to is something called, how do I allocate direct loans that are available to you from the federal government? I'll start off with a really simple example here. The student in question, for the example that we've been using, they are eligible for $5,500 borrowing through the federal government for their first year of college. And that number goes up a little bit each year that they're in school. And so right now I'm trying to figure out, can I give you access to all $5,500 of that? And can I give you some of that amount as loans that don't accrue interest while the student is in school? And so I won't go through all of the math here, but if you have questions after you look at the deck, I'm more than happy to look at it. In this example, as a financial aid administrator, I'm able to say, you're eligible for $3,500 of something called subsidized loans, which are loans where you don't have to, there's no interest that's going to start accruing until 6 months after you graduate. And there's another $2,000 through this program that you're able to borrow. Unfortunately, the interest does start accruing once you borrow the money. Which takes me to the last step, which is, unfortunately, after running through all of the math, you still have $5,105 of remaining need that the items above have not yet been able to help you cover. There are still options. And so what would end up happening is maybe the school has some institutional aid, money that it itself is able to allocate to you to help cover part of this. maybe you are attending school in a state that has its own financial aid program. And so you could potentially get some money from your state, especially if you're attending an in-state school. Uh, and then finally, the other pocket of money that is available to you through the federal government is something called a Parent Plus loan. And so you'll get to the end of this process, and the financial aid office, you've contacted me and said, there's no money from the state and there's no more money you've given me. I can't pay this $5,100. What can you help me with? And I, as a financial aid advisor, would say, here is a link to apply to what is called a Parent Plus loan from the federal government. And most people will qualify for it. In future webinars, we'll talk about how that actual loan works and what it costs. But that is kind of the escape valve that helps you meet your remaining need for the year. That is the entirety of what I wanted to walk through related to SAI and financial aid packages. I hope that was helpful, and happy to answer any questions that people might have about how to think about this.
I think it was definitely helpful. I think for a lot of people, it kind of like opened their eyes and now they have a lot of questions, which is fair. One thing, Chris, there were questions, and I don't know if how much like we really touched on it, is related to divorced families.
Yes.
And
So
just, to explain who fills it out, and also how step parent income might be included or not.
it's a great question and a very common one. So there's a specific set of rules that determine whether one or both parents, or really who has to be involved in completing the FAFSA form. And so in the FAFSA webinar, we go through that in a little bit more detail because there's a decision tree. But the basic way to think about this is the Department of Education says that if parents are divorced or separated, then the parent who is supposed to fill out the FAFSA form for that school year is the one who has provided more support to the student over the last calendar year. And they don't explicitly define what more support exactly means. And so it's a little bit of a gray area where you are supposed to use your own best judgment. If you end up determining that the parent who provided more support is, let's say, parent A, and parent A is remarried, then under some of these scenarios, the combined new income of that household would be what gets reported into FAFSA. There's a flow chart and a pretty simple tool the Department of Education put together that lets you just answer a small handful of questions that then just results in showing you exactly who between parent A and parent B, as well as, let's say, remarried step parents would need to be involved in contributing towards submitting the FAFSA form.
Chris, and I know you did go over this, but there's still questions. So maybe can you talk a little bit more about 529 plans, if they're in the parents. So let me just actually maybe explain this for most people. And I know, you probably don't pay attention that much, but a 529 plan, there's an owner and a beneficiary. And usually the parent is the owner and it's the student who is the beneficiary. So even though we use the common language and say, oh, that 529 is for my daughter, and it may be very true, the daughter is the beneficiary, the parent is still the owner. So that I'm just explaining that to give context as to why the 529 assets are included as a parent asset, even though it could be for, a student. So maybe again, you just want to, and so somebody said, well, I filled out the beta version of FAFSA and they didn't ask about 529 plans. And they didn't ask because they assume that you understand that the 529 plan is actually the parent asset. That's why it needs to be reported as part of the assets.
Yes, exactly as you stated. So let's just walk through a few things that are interesting to know about how 529 plans work. Uh, and for anybody who is confused about whether or not to report it as an asset, don't feel bad because the form itself isn't the most clear and thing to understand. So, as Debbie was mentioning, you would report the 529 plan that you own and only for the student for whom you are filling out that FAFSA form. If you have more than one student whose FAFSA form you're filling out this year, and each of those students has a separate 529 plan, do not combine the value of multiple 529 plans and report that on each student's FAFSA application. Just please do make sure that you are only reporting the 529 plan for whom the student that you're filling the form out for is the beneficiary. That's like one of the key things that can impact the amount of assets that end up showing up on your FAFSA form and then your SAI. And then if the 529 plan, again, happens to be owned by grandma or grandpa or somebody else, don't report it as an asset. It doesn't exist in the eyes of the FAFSA form.
And so somebody did ask, well, can I transfer the 529 to the grandparents? And it's not a straightforward answer. I mean, the government actually allows these transfers. It's usually related to whether your 529 plan program allows them, or, so you have to actually check each, plan, 529 plan about what their rules are for transferring. So that's one thing. And then I will say in general, for people who are now learning about FAFSA and assets and what it impacts, if you start thinking, oh, should I be moving some money around so I should get it out of my name or something like that? I mean, if it's legal to move it, maybe, but I wouldn't actually, you also have to think sometimes moving money has tax implications. And as Chris kind of went through the example, your assets play a part in the SAI, but it plays a much smaller part as compared to your income. So, if you're going to consider about thinking, should I move my assets? Then also kind of run the numbers. Is it really going to make a difference? And in most cases, it's not. It depends. It will potentially make a difference if like you're on the borderline of maybe making your SAI a little lower. That will get you aid, or it could be that you are retired and because of that you have a low SAI because you don't really have that much income, but you have assets, and so your assets are kind of ballooning your SAI. So maybe there are ways to deal with your assets, but I wouldn't kind of start thinking, oh, how am I going to move everything around so I don't show any assets on FAFSA, because it may actually not make that much of a difference.
I think that's very fair. I see a lot of fantastic questions, by the way. Thank you, everybody, for all the engagement. Let's see. Do scholarships and grants affect the financial aid package the school offers? So there's one somewhat complicated answer. I just want to give the simplest version of an answer I can give you, and something that's just worth watching out for over the course of the next year, is that when you receive an external scholarship, that is typically going to be reported to the school. Not always, but typically. And once it is reported to the school, then they effectively remove, you can think of it as they're going to lower your cost of attendance by that amount, is the simplest way to think about it. I mention this because a mistake that I have seen happen a small number of times, but a few times, is that people realize, let's say a family realizes that, hey, I actually need to borrow that $5,000 from a federal loan in order to be able to go to school this year. And they plan on using that. And a few months later, they'll get a scholarship for $5,000. And perhaps they're excited, and then now they plan to increase the amount of money they're going to spend for the upcoming year by $5,000. Unfortunately, what would actually end up happening is that if that $5,000 scholarship got reported to the financial aid office, then they're supposed to reach back out to you and say, hey, actually, you shouldn't be borrowing that $5,000 that we previously said that you could, and it can cause problems. And so if you end up getting a scholarship after you have received a financial aid package and potentially borrowed money, you just need to be prepared to know that it's not just going to be extra money that you get. The financial aid officer is required to claw back the money that you had borrowed so that you have less debt.
Chris, I've seen a question about deadlines for FAFSA.
Yeah, good question. So in a few weeks, when we do the FAFSA presentation, I'll go through this in a lot more detail. But you can think of three types of deadlines that exist for FAFSA. There's a federal deadline. Some states have their own deadline, and some schools have a deadline. And the federal deadline is a very long time from now. It's actually going to be June of 2026. And so,
It's good.
do I have that right? 2027.
2027.
Go
ahead. Sorry.
And the reason the federal deadline is very late is the FAFSA form is available to help you pay for the entire 2026-2027 academic year. And for a lot of schools, that's going to run from, I'm going to just give an example, September of 2026 through May of 2027. And it's meant to say, okay, maybe you got March of 2027, and you only now realize that you need some more financial help to be able to pay to complete the academic year. You're still eligible to fill out the FAFSA form and to then get access to some of the forms of federal aid that are available. But it's valuable to you from a federal aid perspective to fill out the form earlier if you can, because some of the buckets of money that I was allocating to you when I pretended to be a financial aid administrator, they can run out. And so when I talked about the FSEOG grant and federal work study, I talked about them as if I had a pot of money that I was able to allocate to you. And it's true. Each year I receive a set amount of money that I have to allocate to all of the students that I have admitted based on their level of financial need, and that money can run out. And so you want to make sure, at least for those buckets of money, that you've filled out the form on the earlier side. The federal deadline won't impact Pell Grants or the federal student loans. So whether you filled it out earlier or later, I can still give you the same amount of those based on the set of rules, as long as you've done it in time. Each state might have, and there's some links that I share in that FAFSA presentation to each state's financial aid program. Each state often has a much earlier deadline for being considered for different versions of state financial aid. And there's other tips and tricks of things that you need to know about in order to maximize your likelihood to receive state-based financial aid, which is more likely than not going to apply to cases where you have been admitted to and are attending in-state public school. And then the third deadline is really that each school might have a deadline by which they want you to submit a financial aid application. And you'll typically need to have completed and submitted FAFSA before that. And they may use the information from that to allocate the institutional aid, their need-based aid budget. So if it's some of these schools can be very generous as a result of their endowment and the amount of need-based aid they have, but they can't wait around forever. And so they say, please submit your forms by this date so that we can actually go to work on figuring out how to give you the most amount of money we can.
Okay, just looking through other questions. A lot of questions, Chris, related to, well, I know already that my 2024 taxes don't reflect, my financial situation, or, something has changed. Should I appeal now?
Uh, right now, it would be too early because you haven't yet decided, or you haven't yet been admitted to schools and or decided where you're going to go. But the short answer is that yes, you don't have to actually wait until you've received a financial aid award letter in order to appeal. But it would be in your best interest to wait until at least after you have been admitted to reach out to the financial aid office and let them know that you'd like them to reconsider how they're approaching the aid that they will give to you.
If a school uses or requires a CSS profile, do they also use the FAFSA?
So the underlying data, uh, yeah, there's the short answer is that they should. And some schools, I'd say most that I look at would require you to have filed both. Uh, the only hesitation there is we are then talking about CSS profiles. A lot of the schools that have a big need-based aid budget that they are able to give you, and ones that should be a lot more generous than just the federal aid that's available to you, they actually tend to be CSS profile schools. And the math that they might use in the CSS profile to allocate aid to you, it can differ quite a bit from the math that I've showed you so far in this presentation. But short answer, yes.
So most likely a school that's asking you to fill out the CSS profile is definitely using that information because they have to award their own institutional aid, because they have their own formula. That's why they're using the CSS profile. They want more information than what the FAFSA offers so that they can do their formula and determine aid. You're still gonna fill out the FAFSA, and they're still gonna ask you to, because as Chris went through, all tonight, they want to see, are you eligible for Pell Grants? You're eligible for any other federal money that they're only gonna know if you fill out FAFSA. And, they're also gonna, they want people to fill out FAFSA because if you at some point decide that you want to borrow, the only way you can borrow government funds is if you have filled out the FAFSA. So, in most cases, if the school is a CSS profile school, you're going to end up filling out both. I can't really even think of a case where you would only fill out the CSS profile and not fill out the FAFSA. So, okay,
Yeah.
here's a great question, and there are a lot of questions. I don't know if we can stay on to read and answer all of them, but we will look at them later. But this kind of sums up a lot of what people think. And the question is, what can I do to reduce my SAI? And to add to this, I will also say, I don't know, Chris, if you've seen them, but I'm sure people on who are here tonight have seen tons of ads from other companies, other advisors that say, let me help you, basically, let me help you reduce your SAI. Or basically, I can get you more aid. I'm going to show you how you reduce your SAI. And let's just bust the myth about that, or how you can do it or how you can't really do it.
Yeah, I'm really glad you mentioned that. Uh, if it were me, I would not pay someone to tell me how to reduce my SAI. If you have questions, you can reach out to hello@joinjuno.com, and we help people think through stuff like this all the time for free because this information isn't secret and doesn't need to be. There's very little that you can actively do to change your student aid index in a way that would impact the amount of financial aid that you receive. uh, other than what is on this slide or appealing your financial aid. The primary thing that I would recommend if you're in the mindset of wanting to reduce your SAI is to think very critically about whether there are reasons why you can appeal your financial aid. Because truly, the FAFSA form itself is it's a very rough approximation of your family's finances. And the financial aid office wants to help you. And there are a host of reasons besides your income has gone down or you've lost a job that they can consider. Things like having multiple kids in college, things like heavy medical expenses or chronic health issues for someone in the household, and a bunch of other reasons that give the financial aid office the leeway to impact the amount of financial need that your family might be eligible for, much more so than some small tweaks in moving assets around that can impact your SAI. And so in a lot of cases, I'd maybe start off with looking at this chart that I know is a little bit of an eyesore. But the reason I mention that is because more often than not, when I do get detailed questions about changing or impacting student aid index, it tends to be a scenario where the family's income is already high enough relative to the cost of attendance of the program that their children are likely to attend, that making changes on how their assets are allocated wouldn't really impact the amount of aid that they might be eligible for. And the second part of this is the CSS profile is what is primarily used by the schools that have that the larger need-based aid budgets that can really give you a lot more aid that can be helpful. And they ask for more details about your assets. And there are fewer things that you can actually do that they're willing
So
to
according to
consider
this,
in terms of changing your the assets that they would ask you to help use towards paying for college.
So, hopefully one of the major things you've learned from tonight is that the FAFSA is based on your taxes from basically 2 years before your student's going to start college. So, again, if you're a family with a senior and you're seeing these ads or somebody says, I can help you reduce your SAI, well, it's kind of, impossible because your income is from prior year. The taxes have already been done, and the income is really what is the major driver of the SAI. And so you can't go back in time. And so, that's why, as hard as we do, we try and get this information in front of families earlier in the process so that in the potential that they might be in a situation where maybe they want to delay some income that they're going to receive, or maybe they're considering. I have had the cases where a parent is considering getting a second job, and depending on what their SAI is, that other job kind of might put them over the edge and they might not get as much aid. And crazy as it sounds, it might be better that they don't work because the additional money that they earn is going to be less than what they lose in aid. I mean, so there are those scenarios, but those are far and few between. And the majority of the people, you can't really make a huge dent in what your SAI is. And particularly in 12th grade, it's kind of virtually impossible.
That being said, there are things that you will be able to do that can impact the amount that you'll ultimately have to pay out of pocket for school. And there are, I'd say honestly, like months worth of content that we can walk through over the next year. And I promise you that anything that you need to know, you'll know well in advance of when you need to know. And
Right.
it'll be everything from figuring out how to actually get more aid from the school to just things to look at carefully if you ultimately do need loans to reduce the cost of those loans. Uh, so I'd say you're already very far ahead of the game when it comes to learning about what you should know right now, truly. And we're here to help for anything that you might need.
And the last thing I'll just emphasize is if there's anything that you can do that will make an impact on your cost of college at this point, it is where your child applies to college. So the selection of where of the colleges on your students' college list and where they send applications to right now is going to make the biggest impact because what you now can understand what a college's total cost of attendance is. You should be understanding, do the colleges my student apply to, do they even offer need-based aid? Do they offer merit scholarships? So that right now is going to make much bigger impact than how do I figure out how to reduce my SAI?
Absolutely. And if I can make one last plug, if you'll forgive me, uh, you can just sign up for Juno's waitlist now and the only purpose of this is to really say, if you end up having financial need that your school is not able to meet for you, then on June 1st, what we're typically able to return to you is a way to quickly check what rates you might be eligible for without impacting your credit. There is no obligation to use anything Juno puts in front of you. There's no costs. We don't sell or share your information. But the reason I make this ask now is we grow large groups, and the larger our groups get, the more leverage we have over lenders to help put something great in front of people. And the larger I can grow those groups early on, the easier it gets. And so it is a bit of a group effort. And hopefully, whether or not you use any product that we're able to put in front of you, our full team is still around every single day of the year to help answer any of the types of questions we walk through tonight. And we're never going to charge you for that.
Okay, well, we will look through the rest of these questions and try and summarize them and send some answers, in a follow-up email that will be sent out along with the link to the slides and a link to the recording. And as Chris said, this is kind of just the start of the beginning of what we call financial aid season, where there's going to be a lot of questions about the FAFSA, about filling it out. There'll be questions about the CSS profile, and we're going to have more webinars to definitely review a lot of those forms and processes and answer questions. So happy people could show up tonight and start learning, and you still have time to get your questions answered. You still have time to make good decisions about where your student applies to college, and we're here to help. Thank you, Chris, as always.
Thank you, Debbie, for allowing me to be here, and thank you, everybody, for joining.
Absolutely. Okay. Take care, everyone. Good night.
Good night.